Mr. Buffett, my name is Bill Ackman. I'm from New York City, and my question relates to the appeal of Salomon Brothers as an investment. You talked earlier about leverage and the dangers of leverage. Salomon is a business which is levered 30 to 1, which has very narrow margins and earns a relatively modest return on equity in light of the amount of leverage that they use. What is the appeal of the business to you?
We have here today the chief executive of Salomon Inc., the parent company, and also the chief executive of Salomon Brothers, the investment banking arm. And I would say one of the things Charlie and I feel extraordinarily good about are the two fellows that are running that operation. They did an exceptional job under extraordinarily difficult circumstances, as did John McFarlane, who's also here today. The three of them, I mentioned four people in the annual report, and Salomon wouldn't be here today without those three, and it wouldn't be the company in the future that it's going to be without them. And they did an absolutely fabulous job. It's the sort of business that, as you point out, uses a lot of leverage. It doesn't, in one way, it doesn't use as much as it looks like, in another way, it uses even more than it looks like. But the test will be, A, whether they control that business in a way that leverage does not prove dangerous, and secondly, what kind of returns on equity they earn while using it. You certainly should expect to earn somewhat higher returns on equity when you are necessarily exposed to a small amount of systemic risk and significant amounts of borrowed money than you would in a business that's an extremely plain vanilla business. But I don't know whether you've met Bob and Derek, but I think you'd feel better about having leverage in their hands than about any other hands you can imagine. Charlie?
Why don't we have those three gentlemen stand up?
Yeah, you ought to give them a hand.
They really have done a job for Berkshire in this last year.
I'll lead the applause for them. Where are they? There they are.
Given the scrutiny that the tobacco business is going under right now, number one, what do you see as the business prospects for those huge cash cows? And at any point, would that be attractive to you given their liability?
Questions about the future of the tobacco business? I probably know more about that than you do, because it's fraught with questions that relate to societal attitudes, and you can form an opinion on that just as well as I could. But I would not like to have a significant percentage of my net worth in the tobacco business myself. But they may have better futures than I envision. I don't really think that I have special insights on that. Charlie, you?
No.
You have to come to a conclusion as to how society is going to want to treat, and the present administration for that matter. The economics of the business may be fine, but that doesn't mean it has a great future.
Good morning, Mr. Berkshire,
Morning.
or Buffett.
I have a niece here who has a son named Berkshire, so
I'm Chris Blunk from Omaha. My first question is, in years past, we've had samples of various products. When are we going to have some Guinness?
Some what now?
Guinness samples?
The LA earthquake, which is originally, I believe the first estimate of insured damage was $1.5 billion, which struck us as kind of ludicrous, but has now escalated. The last official estimate, the one we use that's a trigger in our policies, I think is either $4.5 billion or $4.8 billion, but it's going to be higher than that. Our losses are fairly minor. If it gets to $8 billion of insured damage, that would trigger another policy or two. But I would say that the LA quake, which did considerably more damage, I think, than people would have anticipated from a 6.7 for various reasons having to do with how quakes operate. That quake is not going to turn out to be of any real. It's not the kind of super cat that a $15 or $20 billion hurricane which hit Florida or Long Island or New England would be. That's the kind of we could lose, or we could pay out $600 or $700 million in sort of a worst case super cat. Now our total premiums this year might be, say, $250 million or something in that area. So one super cat in the wrong place would produce, and there could be more than one, could produce, we'll say, a $400 million or thereabouts underwriting loss from that business. The LA quake is peanuts on that scale, but it wouldn't have taken a whole lot more in terms of numbers on the Richter scale if it happened to have an epicenter where it did and be of the type that it was, relatively shallow, that we could have had that sort of thing happen. I think that the insurance industry has vastly underestimated, maybe not now, but up till a few years ago, the full potential of what a super cat could do. But Hurricane Andrew and the LA quake may have been something of a wake-up call. They were far from a worst-case situation. A really big Type 5 hurricane on Long Island would end up leaving a lot of very major insurance companies in significant trouble. We define our losses. Essentially, $700 million sounds like a lot of money. It is a lot of money, but there are limits on our policies. That is not true of people that are just writing the basic homeowners or business. Those losses could go off the chart. There were certain companies in the LA quake that thought they had what they call a probable maximum loss for California quakes, and the LA quake, which was far from the worst case you can imagine, turned out to far exceed those probable maximum losses. So I think the industry has had and may still have its head in the sand a little bit in terms of what can happen, either in terms of a quake in California or more probably in terms of a hurricane along the East Coast. So far this year, we're in reasonable shape, but that doesn't mean much because by far the larger exposure is in hurricanes, and essentially 50% of the hurricanes hit in September, and I think it's about 15% would be in August, close to 15% in October. So you have 80% roughly in those 3 months, and then there's a little tail on both sides. But that's when you find out whether you've had a good or bad year in the super cat business, basically. It's a business we like at the right rates because there are very few people that can afford to write it at the level that the underlying company, the reinsured companies, need it. And we are in a position, if the rates are right, to do significant business. Charlie?
Nothing to add.